Hello everybody, welcome, and thank you for being with us today. We do have traders attending this webinar from all around the world, so good morning to you, or good afternoon, or good evening, whatever's appropriate for your corner of the world. This is Craig at Max Trading. Chris and Eusebio are here with me, and we are glad to include you as part of the Max community today. And we also welcome many others who will join us later on the video playback. We really do enjoy this opportunity to show you a very productive trading system. It's an exciting time for us because we know that this is the very best in trend following systems, and we know it is a game changer for every level of trader. And by that I mean newbies, experienced traders, struggling, or even full-time professionals. Everyone will love the confidence and the success that comes with a tried and proven system. And Max is equally effective in all markets and all time frames, so that makes it very flexible. Very nice. If you like the excitement of fast charts, let's say a 1 minute up to 5 minute time frame, then Max is for you. If you love scalping, Max is for you. Or if you perform better on a slower chart, maybe 15 or 30 minutes, then it's for you. Or maybe you're one like me who needs lots of time away from your computer and you like 4-hour or 8-hour or daily charts, Max is for you. And if your preferred market is YM or ES or DAX or Forex pairs, commodities, options, stocks, whatever you like, again, Max is for you. You're about to get a good look inside a trading system that can help you meet your goals. And at the same time, it very carefully protects your account balance as it grows. As you well know, all trading involves risk, but this system manages risk extremely well. You'll be very pleased. And losses are minimal while gains are maximized. And with the addition of our enhanced trade format indicator, we just call it the ETF, along with the companion, as well as a growing emphasis on global context, Max has truly developed into the ideal trading system. I know you see all kinds of fantastic claims, glowing reports of success from all manner of trading systems. You probably see it every day. Will you please bear in mind that it is very easy to fake the results, and that's why we believe it's really important to give you an opportunity to see Max methods at work on live charts in real time. That's a place where nothing can be faked. Everything is open. And your opportunity is coming up next week, and later today I will send you a link for free registration for that live real-time trading session. And I hope you can attend, but if not, please be sure to watch the video playback. I hope you'll feel very comfortable to ask questions anytime throughout the presentation today. Just use the questions panel and go to webinar, and we'll make sure that every question gets an answer. For many in the room today, this is your first opportunity to meet Eusebio. So let me just say that he is the developer of ETF and the companion, a very fine trader. And many hundreds of traders know that he is also a skilled teacher and a great trading coach. I'm so glad that you're here today to get to know him a little bit as he shows us the Max trading system. And you will begin to understand the great heart that Eusebio has for helping traders. And you can become one of his students, taking advantage of the special webinar discounts and taking that huge step forward in your trading. Eusebio, we're grateful to you. Thank you so much for taking time out of your weekend to share Max with us, and I'll yield the microphone to you.
Thank you very much, Craig. So welcome to everyone to this Max presentation. So before starting, I always like to make a quick video and audio check. So do you see my screen and do you hear me well? If you'd like to type a yes or a Y in the question area of GoToWebinar. Oh, I see several already answering. So Daniel, Mike, Ronnie, Robert, Sydney, Howard, Deborah, etc., etc. I'm not fast enough to see everyone. So thank you very much for your interaction. So what I'm going to do, so I'm going to show you to explain some of the main concepts of the MAX with some examples of MAX trades. But before doing that, let me explain very quickly who I am for those of you who don't know me. And as you can understand through my accent, I'm not an English or an American people. In fact, I am a Belgian trader, but living in France, so my bad English, my bad accent in English. And I am a full-time Forex trader since 2008, so it's now 12 years I'm trading full-time. And but I was already a trader, especially a part-time Forex trader since 2000. But in the past, many years ago, I have traded and investing also in other markets, so the futures market, the stock market, the options market. One market I have not invested or traded is the bonds market. So, at the same time I was trading, I was practicing another profession. I have been for almost 30 years software engineer. I was a service manager in the IT industries, and during the last 15 years of my experience, I have had the privilege to work for important banks in Europe, and this has given me the opportunity to be in contact with some traders in these banks and to see how they handle their trade, to see how they consider the markets in order to handle their trade or their position. So what I'm going to explain, so as I have said, is so a few concepts of the MAX illustrated with some trade, and then I will just mention a few words about the money management we can have and such kind of result we can achieve with the MAX. So historically, the MAX has been created many years ago by late Dr. Jim Pruitt, known as Tiger by his student. Tiger is a very adequate name or nickname for him because he was a guy with a very strong temperament, and I remember being growled by the Tiger was a tremendous experience, sometimes a dramatic experience for some traders, but in fact Jim was really a nice person, and because he knew his time was counted, his aim was to go fast, to share his experience and his knowledge with every of his students, to build, in fact, and to give them a very powerful and reliable, but also flexible trading method. So, and I say method and not system because the MAX is not made of fixed, rigid rules. There are several important elements the trader must take into account to adapt to the market conditions, as I will explain in a moment. And so, because of that, so there are two important keys to be successful with the MAX: work and commitment. It takes time to assimilate all the concepts and all the rules of the MAX, and then to learn to practice them correctly. And so this requires a very high level of commitment. You will not learn the MAX just by watching one time the video. You will need to practice and do your homework, and so ask questions and so on. There are other skills which are necessary to develop. You already know all these skills because they are skills which are needed in many good trading systems. So discipline, patience, persistence, concentration, and confidence, of course, because there is always a part of psychology in trading, which is, for many traders, the most important aspect in trading. I will not comment these aspects. I will elaborate more on during the course on these aspects. So, when we consider to trade an instrument in whatever the market you want, so it is important, I think, to define what a trading method is. And in fact, one of the first points to define in a trading method is what is the type of movement we want to trade. And so it's important to define what is a trend, because if we claim to be trend traders, we need to define what is a trend and what are the movements inside a trend. Then we have to define how and when such a trend and such a movement in a trend starts. And for that, we define a series of entry patterns. We have several types of entry patterns because a movement can start in a different way. And so we have different ways to see a movement starting. Then once we see such a pattern, an entry pattern, we will call it a setup, an entry setup. We have to validate that entry setup. It's not because we have a setup on the chart that we have a trade. The setup must be validated based on three types of conditions: technical conditions, risk conditions, and context conditions, or global context conditions. And sometimes there will be other typical conditions depending on the style of trading we want to adopt. For example, if we day trade, there will be time during the day when we will have to pay attention. Then, once we are seeing all these conditions being fulfilled, we have a trade, we can open the trade, and once we are in a trade, we have to handle that trade until we can close the trade, because the aim of opening a trade is we want to close that trade later in order to possibly catch a profit from that trade. But handling the trade means, for the max, reducing as much as possible the risk we have when we open the trade, and possibly remove completely the risk in such a case that we have a risk-free trade. And then when we are in a risk-free situation, so we can focus on how to optimize, how to increase the profit from that trade. And then, of course, because we have to close the trade at some point, we have to define how a movement or how a trend may exhaust. I don't say a trend may reverse, because we are never sure when a trend is reversing, but at least we can observe when the trend is exhausting. And we have several types of conditions we can exploit in order to observe that the trend is exhausting, telling us that it's a good moment to close the trade. And so the MAX is, in fact, such a trend-following system, and the MAX is an acronym, in fact, which represent three types of concept. The M stands for momentum. We want indeed to see momentum, first of all, before opening a trade. And I need to say that we don't only need to see momentum, but also volatility. We need to have some momentum and some volatility. Then the A stands for acceleration. Acceleration does not mean that the price needs to accelerate. No, acceleration means that once we are in a trade and we are seeing the trend unfolding, we will have the possibility under specific conditions to add to a trade, to make scale-ins. Because these scale-ins will increase the profit we can extract from the trade. And this is what we call the acceleration phase, increasing the trade size, the position size, to make more profit at the end of the trade. And the X stands for exit. And within the MAX, we will see that we have two types of exit. We have a minor exit or a momentum exit, which represent, in fact, a scale out. And we have the final exit when we close the remaining opened position. And so, as I have said, the MAX is essentially a trend-following method. When Jim Pruitt has built the MAX, it was essentially a trend-following method, and in some circumstances, we had the possibility also to trade a counter-trend movement. But we have, over time, generalized that idea in the MAX, and now we no longer make the distinction between a trend or a counter-trend. And you will see that along the examples I will show in a moment. And, of course, we have a very strict trade risk management and strict money management in order either to control the risk on the trade or to control the growth of our trading account. So, and as Craig has mentioned just a few moments ago, the MAX can be used in any time frame, in any market, provided the financial market we consider is liquid enough, which is a point which is valid for any trading system. Understanding what the MAX is important, but it is also important to understand what the MAX is not. Now I should drop from this presentation that the MAX is not a scalping system. No, we have, upon the request of our members, we have added recently a scalping approach to the MAX. So I have to update this slide. But it is not a news trading. We do not try to catch this fast spike we see sometimes when we have a big surprise in a news release, because these fast spikes, in fact, provide with bad price execution, and if we have some latency in the order execution, this will worsen even the entry and the exit price. So, but we can trade the movement after the news. We analyze what the news has been, and then we can decide if it is worthwhile or not to trade and in which direction to trade. And then, as I have said previously, the MAX is not an elementary buy-sell system with fixed and rigid rule once and for all. It's a little more complex than that, in fact. So I have said that we have entry setups to define when we can open possibly a trade. They represent, in fact, high probability opportunities. And then we have our exit setups. The exit setups are based on high risk situations. And with the MAX, we have several types of exit setups. We have exit setups based on technical indicators. For example, if we take an oscillator like the RSI, the stochastic of the RSI, so that indicator gives a lot of possible exit technique. But we have also other exit technique. We have poor price action behavior. When the price is making a typical behavior, a typical pattern, this pattern will be also exit setups. We have, of course, a combination between price action and indicators. We have timing aspect. For example, a typical example is when we are facing an important news release and we are in a trade, it's better very often to close the trade before the news release, especially if we day trade. And then we have that concept of movement invalidation. We have several types of movement invalidation, recognizing when the movement is possibly exhausting, and they will provide exit setups. And we have, of course, sometimes a trend reversal. Sometimes we recognize a trend reversal, and this trend reversal will be nice exit setup. So, when we use a trend following system, since several years, these systems are facing several challenging, and the MAX is not an exception. We observe from several years now that the average daily range is progressively decreasing. And sometimes the average daily range is really small, even for the high volatile pairs like the pound yen, like the pound kiwi, like the pound Aussie. And so that decrease in the average daily range has a consequence that we have poor price action, we have small price movement, we have tight ranges, we have way less momentum, but still volatility. And this makes the movement way more difficult to trade. Sometimes also what may happen is we may have, with the classic MAX, which is a classic trend following system, so we may miss a large price movement because sometimes the price can reverse very quickly. And then in the past, with the classic MAX, we had the obligation to make the distinction between a trend and a counter trend. And this sometimes creates a problem, because if we have to separate an entire movement into two parts, and one part we cannot trade and one part we can trade, we miss a large opportunity should we have considered to trade that entire movement. And so, and as you know, when we use some technical indicators, these indicators can introduce, of course, a lag, but also a lack of reactivity. And so, especially when we have a poorer price action, in fact. And so, and the time bar chart can also provide some lack of detail and some time lag. We have to wait for the bar to close before considering to take a specific decision. So, an example of the progressively decreasing average daily range is given by this chart over a period of 10 years on the euro-US dollar, on the pound-US dollar, and we can see that, of course, sometimes the average daily range is increasing, but globally we can see that the average daily range is decreasing over years. And this is true also for the crosses or some exotic pair for those of you who trade exotic pairs. And for the moment, we are at a very low level of the average daily range. And so in order to overcome all these challenges, these problems create for trend following systems, so we have introduced several years ago the concept of ETF. The concept of ETF has the aim to adapt readily to the changing market and to better exploit, in fact, not only the trend and the counter trend, but in a more general way, the movement, the momentum movement we are seeing in the market. So, and the ETF concept is introduced in all the MAX courses. We have, as we will explain later, in fact, 5 levels of courses with the MAX, but today we will focus only on 2 of them. A basic one, which is called the MAX ETF Primer, which is just an introduction to the MAX concept and to the MAX trading, and the MAX ETF Standard course, which is our flagship course. The other 3 levels of the course are the MAX ETF Lite, the MAX ETF SAM, and the MAX ETF Advanced, which progressively add new concept, more sophisticated concept, more sophisticated procedure to further improve the profitability of the MAX. So with the ETF concept, we can trade many more movement, we can trade larger movement, we can be nimble in the way to trade the movement, and we combine, in fact, we recombine the trend and the counter trend movement, as I will show in an example. So, or in several examples, which is exactly what I'm going to show you now. So what can you expect from the MAX ETF? And here this is a small glossary of the notations I will use on the chart, but I will explain progressively through the chart. So let's take a movement on the pound Aussie this week. It was a few days ago, on the 27th of January. That day, my global context was to trade long the pound Aussie. In fact, the pound was strong, the Aussie was weak. And this was explained by the general context, global context. And so I was looking only for long trades. And then during the session, at some point, we had an entry setup. This entry setup is here what is called long ETF S&P MO. S&P means safe and perfect. It is one of our entry setup at the very beginning of a new trend. And MO means momentum entry. And then we have always a stop loss, which is associated to an entry setup. Whenever we consider a trade, we always define an emergency stop loss, which is a stop loss having the aim to protect not only the trade, of course, but also the trading account in the case the price goes against us. And the size of the trade is always defined with the size of the stop loss and the risk we take on the trade. It may be 2%, it may be 1%, 0.5% of the trading account. So any percentage you want, provided it is a wise risk. So, and then later on, once the price is unfolding the trend, at some point here we have a set of criteria defining an exit. And so here, when we make an exit, in fact, we close the trade not entirely, but partially. In fact, whenever we open a trade with a MO, a momentum entry, we consider the trade is made of 2 units. So each unit represents half of the trade size. And when we make an MX, remember an MX is a momentum exit or a partial exit or a scale-out, we close 1 unit. In this example, that first unit has made a profit of 23 pips. You can also observe on the chart these 2 horizontal lines which represent the max price levels. There may be many max price levels on one chart. That day on the pound, or that week on the pound Aussie, there was that level. And you can see that the exit has been made right below these levels. And then the price has made somewhat a small pullback and then has resumed the up movement, and so has crossed these levels, and at some point we had here another exit setup. And that exit setup, because we are trading with the MAX ETF Primer here, consists in closing the second unit. And that second unit has made a profit of 50 pips. So in total, this first trade has produced a profit of 73 pips, representing a nice reward to risk ratio of, no, it is not 11.43 R, but I have made a typo here. It represents a reward to risk ratio of, I'm going to tell you that exactly in a moment, 2.43. 2 points. So it's not 11, but it is 2.43 R. R represent so the risk we associate with the trade, a 1% or a 2% trade, for example. A few minutes later, in fact, approximately 1 hour later, another entry setup has appeared, allowing a second trade, long trade, of course, called REMO, a trend resumption entry setup, with its specific setup or stop loss, which may be different from the previous stop loss. And then we follow exactly the same mechanism. At some point, we have an exit setup. Here we have a series of conditions telling us that we have to bank a profit or to close one unit. This is what we have made with our MX number 2. And then a few bars later, we had a nice exit setup with a movement exhaustion. So here you can see that our final exit, closing the second unit, is almost, I will not say an optimal exit, but a very nice exit of this trend. And so these two units have made a 67 and a 62 pips profit, so representing a nice 3.79 R reward to risk ratio. And so after that, we were approaching, in fact, we were in the European lunchtime period, and then for the rest of the day, there was almost no other opportunity to consider. And so to trade during essentially the European session, starting a little before the European session, which is possible with a pair like the pound Aussie. We can trade the pound Aussie because it contains a Pacific currency during the ASEAN session. And so a nice result of 6.23 R profit for a total of 202 pips. So with the Max ETF primer, we have one entry, one possible exit, and then the final exit. And we can repeat the trade as long as the trend stays valid. When we apply the Max ETF standard, so the most elaborated technical approach of trading with the Max, we can handle that trade in a very completely different way, considering possible scalings. And so, of course, the trade starts with the same entry setup. We have the same MX, but later, when the price has crossed these two max price level or max zone level, in this case, we had an opportunity to make a scaling, so to add to the trade. SC represents a scaling. And when we make a scaling, we add 2 units to our position. With the MX, we were left with 1 unit. With the scaling now, we are left with 3 open units. And later on, we have here an opportunity to close another unit. We are left with 2 open units. And then we have another opportunity to close another unit. We are left with 1 open unit. And then we have another opportunity to make a scaling, the scaling number 2. So we are now left with 3 open units. And then the price moves, takes off in this case. At the same place as with the Max Primer, we had the opportunity to close 1 unit. We are left with 2 open units. And then we have the same final exit setup here. By the way, this setup for the Max member who are in the room, you will recognize TP setup. So TP doesn't mean a target profit, of course, but we have so an exit, a final exit, when we close the 2 remaining open units. And when we add up all the profit made on these closed unit, we observe that the total profit was 329 pips. Considering a stop loss of 15 pips, this represents a nice reward to risk ratio of almost 11 R, 10.97 R, to be compared with the 6.23 R profit of the Max Primer. Of course, this is a nice trade. This is a nice movement. We don't see such movement every day. We must be honest about that. These kind of movements happens 2 or 3 times per week and per pair, provided the pair is volatile enough. But we just need 1 or 2 such movements in the week to make a nice week. So, but with the Max, considering the Max methodology, considering the context, the global context, and considering the Max price level, there was essentially during the first part of the European session 1 trade, and it was the right trade to take. Combining all the concept of the Max, it was impossible to miss that trade. So, another example on another volatile pair, the pound Kiwi, a few months ago, 2 months ago. Similarly, we have here so an upward movement. The context was also to go long the pound Kiwi. And here you see what I mean by trend and counter trend. In the classical Max, this blue aqua line represents a long-term moving average, which is called the home base and the home base channel. And when the price is moving below the home base channel, in the classic max, we are looking for short trade, and we cannot trade the counter trend movement when the price is going back to the home base. And when the price is above the home base, we look only for a long trade. Here with the max ETF primer or the max ETF standard, we consider the entire movement, whatever the price is doing in relationship with the home base. And so we can recombine into one unique movement, a counter trend movement and a trend movement. And we have exactly the same mechanism. So for the max ETF primer, one entry, one MX, one exit, then another entry when the trend resumes, an exit, an MX. And so you can see here two trades again, and you see the kind of result, 3.15 R result for the two trades. You can observe that later there was another long trade possibility. And by the way, I have not explained in the two previous examples, but you can also technically associate these trades with our companion indicator. The ETF lines are two lines which nicely follow the price action. They are not moving averages, they are more elaborate moving averages, or a combination of them. They are extremely regular and they are not so sensitive to the pullback the price can do. And when we associate these ETF lines with our slow bias indicator, which is the green and red line here at the bottom of the screen. Green represents technically to take long trades, red represents technically to take short trades. And so you can see that here this slow bias, when it was green, would have allowed also to take that nice long trade, and when the trend reversed and the slow bias became red, it was possible to take also that short trade. But with the global context was going long for the pound kiwi, we would have taken only the long trades and ignore the short trade. So this was the example with the max primer, but the same movement with the max standard considering scalings. Now this movement would have been an entire unique movement with possibly an earlier entry. Some scaling, we can recognize a scaling number 1, then a scaling number 2, then a scaling number 3, and several MX or scale out, an MX number 1, MX number 2, here MX number 3, MX number 4, and our final XXX, so which was a clear final exit based on the rules we have with the max, combining here the price action and indicator. And this movement traded with the max standard has produced a nice 10R profit instead of, as we can see in the previous example, a 3.15R profit. So the pound Aussie, the pound Kiwi are two examples of forex pair, currency pairs on the 5-minute time frame, but we can trade any other instrument in any time frame. And this is an example of crude oil in the 30-minute time frame, and you can see exactly the main structure of trade with, for the max primer, an entry, an exit, and the final exit, and you see the type of result, a 2.4R. And with the max ETF standard, so we have along the trade some additional scaling and scale out, producing, of course, a larger reward to risk ratio. When we trade with the max ETF standard, so we get a reward to risk ratio which can be 30% to 300% larger than the result we can get with the max ETF primer. So this is an example of a commodity, so the crude oil, but we can trade also indices. For example, the Dow Jones or the YM, for those of you who trade in the futures market, on a daily time frame this time. And so this nice up movement, which was decomposed into two long trades with the max ETF primer, a first trade with its initial entry here, with one exit, a second exit, the final exit, then a second entry at this point, followed with a first scale out here, and then the final exit, so producing two trades totaling a nice 6.13 reward to risk ratio. Now the same movement with the max ETF standard, considering so the scaling and scale out in a more sophisticated way, so produces here a reward to risk ratio which is way larger, almost a 20R 20R reward to risk ratio, so more than 3 times the reward to risk ratio of the max primer. And it was a unique trade with several scaling, 1, 2, 3 scale-in and 4 MX before the final exit. And so we don't need to have many scale-ins in order to increase the reward to risk ratio. Just 1 or 2 scale-ins are enough, but we make as many scale-ins as the movement allows us to do. And sometimes when we have very exceptional movement, which can happen 1 or 2 times a year, we can make 5, 6, 7, 10 scale-ins along a movement, provided, of course, you have enough margin in your trading account, which may be a difficulty in some countries when the country or the brokers in this country propose lower leverage. And this is the case in Europe, and this is the case in USA, where the leverage is limited most of the time to 50 to 1 in USA, 30 to 1 or even 20 to 1, 25 to 1 in Europe, depending on the pair which is traded. So with the MAX, we have an average winning rate around 70–75%. This does not mean that the other trades are all losing trade. We have also break-even trade. We have approximately 10% of break-even trade. And so this means that we have around 15% of losing trades. But the beauty of the MAX is when we have a losing trade, the loss is always controlled and is always a small loss. This is a typical example of a losing trade. We have here a short entry in this down movement. It was a resumption trend, so a setup corresponding to a resumption of the downtrend. And in the first step, the price went in favor of the trade, allowing to make at some point an exit, closing 1 unit, but then the price has continued to go against the trade. And at some point, in this case, it's an example of a movement invalidation. The details of the movement invalidation technique are explained in the course, of course, forcing us to close the second unit, and you can see before the price reaches our stop loss. And because we have that 2-step exit, and exiting in the worst case scenario before the price reaches the stop loss, this helps to reduce the loss in the case of a losing trade. And in this example, the loss was a very tiny loss of minus 0.1 R, which is a loss which is easily recovered with just one small winning trade. So sometimes it's better not to trade. I have said that the MAX is also a flexible trading system or trading method because we have to recognize the market conditions. And to recognize the market conditions, we use what we call the price modes. The price modes describe what is the conditions of the market. And we have, in fact, several price modes. We have 2 large sets of price modes, a local price mode and a global price mode. For the local price mode, we have 3 types of price mode. We have the trend mode, we have the counter trend mode, and we have the consolidation zone mode. In the global price mode, we have the choppy market or the choppy mode, and we have a very figurative name. With a very figurative name, we have the spaghetti zone. And this is an example of a choppy zone, a choppy market, when the price moves in a rather erratic way with almost no directional bias. In this example, the price has in fact a small upward directional bias, but it is essentially very choppy. During the course, of course, we explain all the tips or criteria helping us to recognize when a price is in a specific price mode, especially in a choppy mode. And when the price is in a choppy mode, there are some conclusions we can draw. In fact, once we have recognized after some bars, the choppy mode is the most complex mode to recognize. It requires more time to recognize the choppy mode. But once we have recognized, for example, on this point here, that the price is moving in a choppy mode, we know for sure that the choppy mode will last for many more bars, and typically between 100 and 200 bars. And so we have plenty of time to see that the price will stay in a choppy mode. And so consequently, the trader can make the following choice: either to skip all the possible trade which will appear during that choppy mode, or to take them, but to handle them in a very, very specific way. And in the course, we explain in details how to handle a trade in a choppy mode in order to optimize the result we can extract from such a choppy market. So when we are in the specific case of a spaghetti zone, so the spaghetti zone is a special case of a choppy market, we are sure to never have a trade inside a spaghetti zone. So this is the max as I can explain here in this presentation, and once you achieve consistency in applying the max, so the max concept and the max rules, what kind of result can you obtain over time? You have seen through the previous example that we may have sometimes some losses, but these losses are small, and we can have from time to time a big reward, a large reward to risk ratio. But even if we consider more conservative reward to risk ratio, we can still, in fact, grow an account in a very interesting way. And this slide shows the kind of growth we can obtain. Let's suppose that we start with a trading capital of $10,000. The currency is not important here, it's just for an example. Let's consider $10,000. And let's consider a risk of 2% per trade, which is, for me, a bit too large. In the past, I was trading with a 2% risk, but now, with more experience, many more experience, with age, of course, I think I'm becoming wiser, so I limit my risk to 1% and sometimes even to 0.5%. But let's suppose furthermore that we have an average stop loss of 15 pips. And let's suppose that we are able every day to produce through one or several trades a total number of trades of 60 pips. 60 pips, when we compare to 15 pips, this represents a reward to risk ratio not of 4, because remember we use 2 units per trade, but 2 to 1 reward to risk ratio. So because indeed when we use a 2 units approach in trading, we have to divide the total number of units by 2, by the number of units, so this gives 30 pips, and then we can divide that half result by the size of the stop loss to have the real reward to risk ratio. So 2 to 1. And let's suppose furthermore that we withdraw 5% of the account every month. 5% of the account, not of the profit, of the account, every month, every 21 days on average. And so we can see that provided we trade every day, which may be a challenge. I completely agree with that. It's not necessarily easy. It may be a challenge to trade every day. It may be a challenge to produce such a result every day. Some days the result will be larger, some days it will be smaller, some days we may have a loss. But this just gives an example of what can be achieved and in which period of time. So if we are able to make on average 60 pips profit on average per day, the account will grow nicely, and it will require approximately, how many days here? 1 month to double the account while withdrawing 5% of the account, so at the end of the month. And you can see that after the second month, the account is multiplied by 4. The withdrawal is even larger, and after 3 months, the account achieved the 100,000 mark with a nice total withdrawal here. And so, in fact, what is important to achieve such kind of growth is to achieve consistency in the way to apply the concept and the rules. This is why I have said at the beginning of this presentation that discipline, patience, concentration, were necessary, in fact. Conviction, also discipline and patience, because we trade based on rules we have, and each rule represents a set of conditions to be fulfilled. We need to wait with patience that all the conditions are fulfilled, and with discipline this means that we have to wait for all the conditions to be fulfilled. And when all the conditions are fulfilled, we can apply a decision, and the discipline consists in effectively applying the decision. Then when you achieve consistency in the trading process, the result will follow automatically. Some days will be more challenging than the other because it depends on the market conditions. Some days are difficult days, some days are easier. So when we have trending days, it's easy. When we have ranging day, it's a little more difficult. So As I have said, the MAX is organized into several levels of courses, in fact 5 levels. Now we have to add a 6th level. So, but basically the 5 levels are the MAX ETF primer course, which is just an introduction to the MAX, just to let you know what the MAX may be and who we are, of course. Then the MAX ETF light course, which is something between the primer and the standard course. We will show you the difference of what these levels are. Then our flagship course is the MAX ETF standard course, which explain in full detail the scaling process, the scaling and the scale out process. And then we have 2 more advanced level, which goes much more into the details of advanced concept in the MAX Advanced course, when we consider also a more global point of view about the entire market, and the MAX ETF SAM, when we go more into the details, into the price action itself, in order to have more decision opportunities. So, and the 6th level we have recently added, the new course will start next week, will be the MAX ETF scalping course. Upon the request of many of our MAX members, so we have designed, in fact, a scalping approach with the MAX. And by the way, when you trade with a scalping approach, in some circumstances, a scalp trade can transform into or can become a trend trade. If the price is moving nicely in your favor, so a scalp trade can become a trend trade. So, and this will be explained in the course. So each MAX course contains the following point. First of all, a trading methodology based on sound concept. We explain why these concepts are working. This depends on the market behavior and the decision, the behavior of some of major operator or actors in the market. And our trainings dedicate on very important aspect. We trade price action. We use indicators as guideline, of course, but these indicators are only tools. We don't trade the indicator. They are simply tools helping us to go faster into the recognition of opportunity situations or risky situations, but we trade essentially the price action. And as I have said, we have a very, very solid trade risk management and a very solid money management to control the way we grow an account and to control the risk we are facing when we open a trade. And so the main focus we always have as a MAX trader is the trade risk monitoring. We want to, as quickly as possible, as quickly as the price allows, we want to be risk-free. And only when we are risk-free, we can dedicate our attention to increase the profits. So the trade risk management should always be the first priority of a MAX trader. And so we try to develop the personal confidence of each trader through our different activities, coaching, mentorship approach, especially during our practice session. Every Saturday we have a practice session through the homework. At the end of each training session, we assign a homework to our student, and we grade this homework in such a way for them to have a feedback. And then we have also other activities like some workshop during along the year. We have a forum, of course, and as I have said, the practice session, so every weekend. And so this is the MAX as I can present it to you. If you have any questions, feel free to post them, of course, in the question area of GoToWebinar. And I see that there are already a lot of questions, and my good friend Craig and Chris have answered to them. Now I pass the mic to Chris, who will continue this presentation of the MAX. So Chris, up to you.
Hey, thank you, Eusebio. Can you hear me okay?
Yes, your audio is fine.
Good, thank you. Hi, everybody. My name's Chris. I'm based in New Zealand, so you've got another accent to listen to. I'm doing the sales part of this, wrapping it all up, and at the end of my little presentation, Craig will step in and give away a course or two, and for some lucky new person that's in here, sorry, old Maxes, if you're sitting here listening, and then we can have some question and answers and just answer any questions that you might have in general. This will not take too long. People have been asking. So this is our 67th set of Max courses. We've been running since 2008 when Jim first started it up. Unfortunately, he died in 2009 and left the business to us guys here, and we've kept it going for the past lots of years. We've trained over 2,000 people in the Max so far. And incidentally, we did have a question yesterday from a Max member from 2009 who said, hey, I learned it back in 2009, is it still applicable? The answer is yes, but the ETF gives you even more entries than the old classic Max does. So I just wanted to answer that one. So one of the things that sets the Max training apart from most other courses is that we ask you to do homework. The trading, the system itself, the method is exceptional with the money management and the profit boosting, etc., etc. But the thing that really hammers this all home is the homework side of things. So after each session, which Eusebio normally takes, you'll be assigned some exercises to do, and I'll show you what they look like. But essentially, we'll be asking you to send in a chart that you've marked up with some of the entry setups and exit setups that we've gone through. And this is to make, not to as a test for you. So here's an example of a chart that's been sent in. It's a trend resumption. It's called a BO-REMO, which means a breakout re-entry, essentially. And you can see where the line's been marked and where the person is entered. So the homework is quite important on that side of things. To kind of round this up, what we've got on offer today are essentially 3 courses. We've got the standard with all the profit boosting and the money management and plenty of entries and plenty of exits in it. And then there's the ETF primer, which is a subset of the standard. We've included the ETF primer more for the tire kickers. For some people just want to see what our training is like, even though we've been at it for such a long time. So this one, the primer is profitable, but it's very slow. It's only got a couple of entries in it. It's got a few exits. There's no profit boosting. What do they call it? The drawdown is still only about half of whatever you've actually risked on it, similar to the standard. It is safe, but it just doesn't have the profit boosting or as many entries as the standard. With the standard, you have like over 8 different entry types. You have a wide range of exits that will help you get right out almost at the exhaustion of the actual trend. The ETF Lite just has an extra entry and a couple of extra exits as well. And it's kind of like the primer on steroids, but you'll see how we've packaged that up shortly. But it's still only a simple buy and sell system. It's not got all the bells and whistles that the standard has. So wrapping up, the courses are taught in a lot of detail and the setups you'll find are very precise. So if you're trading the 5-minute chart, normally the entries are within, at times, half a pip, most times around about 1 or 2 pips of when the setup actually fires. So it'll trigger off on one bar, and on the next bar you'll be in the trade, and away you go. Similarly for the exits, when they fire off, within about 2 or 3 pips you'll be taking some profit or closing the actual order itself down. So very detailed and very precise. Like I said, after the course, you'll be invited to the forum. In there we've got indicators for other platforms, and if you need to, if you have a particular platform like CTrader, Ninja, MultiCharts, we can supply indicators for some of those, and if we don't have them, then we can give you our source code for the indicators so that you can get them built for your particular. So what all this is sort of going towards is what we want you to have is a really good solid trading method, not just technically, but also on the global context and the news and the what issues are coming up side of things, so that you're on good solid ground. we want to supply you with as much support as you ask for. So you just got to just ask for it, and we'll do our best. And you'll end up with one of the most powerful trading methods that I've seen around. It's really good trend trading method, and hopefully it will help you achieve your goals like becoming debt-free, your retirement, independence, looking after your family, any philanthropy or church type stuff that you're into. So that's what it's all about, the bottom line. Ta-da. Here are the prices. The flagship course, the ETF Standard, is starts in a couple of weeks on February the 13th. It runs for 7 weeks, and then we also have a bonus session. And lately we've also been having extra sessions in between as well, if anybody wants to sort of brush up or ask us questions that are outside the curriculum itself. The normal price for the Standard is $2,999, just under $3,000. We're running a webinar special for the next little while for $2,399. And if you want to pay it in one lump sum, that's great. We also have payment plans available for a little bit more of a cost, but we've got payment plans. And if you are super new to this and want to sort of start gently and ease yourself into it, then we've bundled all 3 courses together, the Primer, the Light, and the Standard, which is pretty much 4 months worth of training for $2,679. So if you're just starting out, that'd be the one to go for. And as we said, for the absolute beginners or tire kickers, we have a subset of the Standard. It's called ETF Primer. It only has a couple of entries. It runs for a couple of weeks. And the people that have taken the Standard have actually had an easier time, even though they're learning a lot more. They've learned the Standard more easily than they've learned the Primer. And this is because you don't get pushed along as much with the Primer. You're asked to do 2 homeworks. With the Standard, you get 7 homeworks. There's a lot more interaction with the Standard. So with the Primer, you're left more up to yourself to actually do the work. If you have any questions, please ask. But okay, so those are the offerings that we've got on today. So there's the Standard and its 3-course package deal, and the Primer and its 2-course deal. This kind of concludes the main part of the presentation. We've had a couple of questions like what time frames does it work on, and pretty much any time frame that you want, and we'll send out information on how to build different time frames in MetaTrader as well. So if you want to trade a 4-minute chart, you can. And what else was there? We've had a question come through about the platforms that we provide indicators for. I'm not too sure how valid these are anymore because they were built quite a while ago when they were given to us. We pretty much just use MetaTrader itself, and if we want to use, say, something like the Oanda Java platform or Interactive Brokers platform, we use MetaTrader for the charting and then just place the orders directly in those other systems. But having said that, we have indicators for NinjaTrader 7 and 8, and the ETF1 will supply instructions on how to build it. We've also got multi-charts and I think perhaps TradeStation. Thinkorswim and Street Smart Edge, we don't have any for those ones. Some people are working on C-Trade at the moment, and there's a few other platforms around that people are building things for. We can supply you with the source code for you to hand off to the program to do the porting for you. While I talk on the indicators, Jim did make this really cool indicator, which is only available in the Standard, which gives dynamic price targets. It's really interesting. It's super accurate. There's no redrawing, and it's whenever a price spike comes out, generally the indicator is shows where price will go to within 1 or 2 pips. So it's a really nice way of being able to figure out where the end of a trend is coming along as well. So it's just something that Jim built and that comes along with the standard too. Okay, and we'll also send the links out to you. But if you have any questions, let us know. And thank you very much for your time. I really appreciate it.
Yeah, and before seeing you in one of our courses, so have a great rest of the weekend. So take care.